Later today, we're going to get the latest quarterly results out of Zoom Communications. Weird that we call them Zoom Communications. It's Zoom, all right? Zoom, ZM, ticker ZM. All right, here are the expectations from Wall Street analysts. Revenue almost $1 billion in the latest quarter, so we're looking at an annual run rate here nearing $4 billion for the business. Adjusted earnings per share expected to come in at about $1. But as we mentioned earlier, as Emily McCormick mentioned earlier in the program, Zoom shares have been kind of floating around, not doing a whole lot, down about 2% on the year. Now, last year, obviously, Julie, Zoom was the company of the year. Really couldn't have been any other business to capture the way that the pandemic changed all of our economic assumptions, our day-to-day life. But I think Zoom, along with Peloton, but really Zoom maybe at the epicenter of this stay-at-home trade that has worked, but really hasn't worked all that much over the last 6 months. And with revenue here expected to rise almost 200% over the same quarter last year, I shudder to think what kind of number will lead to a huge disappointment here among investors.
Yeah, I mean, remember, of course, when you're talking about the year-over-year gains, we really want to see how they're doing later in the year versus right now, right? To get a real sense of what the long-term growth of Zoom is going to be like. It can't possibly replicate that enormous growth that it saw when many people were just becoming aware that the service even existed. The word that I keep seeing over and over again when it comes to expectations for Zoom is churn. What is the churn going to be for the company? How many customers are going to stick around at Zoom? How many are going to leave? And that number is particularly important when it comes to smaller companies, or at least that's where the question is. With smaller companies, even though larger customers are more profitable for Zoom, it seems like analysts are going to be watching what's happening at those small companies very carefully. And there are sort of different opinions, of course, as to how Zoom is valued here, given the outlook for churn. One of those that has an outperform on the stock is RBC, and they are still relatively optimistic on the company. They're looking at app downloads as an indicator here. They also say that revenue is actually going to beat estimates, looking at some of those underlying indicators. So we'll see where they end up, but Brian Sozzi, churn definitely going to be important part of the game here.
Right on, Julie. And here are my 4 things investors need to look out for to get Zoom stock going again off of this earnings report. The stock's down about 11% over the past 3 months. First, they have to show continued progress in the enterprise. Can they continue to land these larger accounts as folks go back to the office in some capacity? Number 2, retention. Have they been able to keep the enterprise customers they have won over the past year and a half? Look for that retention number on the earnings call. They have to nail it, and they have to nail it in a big way. Third, are they going to beat revenue estimates? The revenue estimate out there year over year is calling for 177% sales growth. But the whisper estimates out there on the street, based on what I found, are looking for 190% year-over-year revenue growth. I think it would be important if Zoom comes out there and posts 200% revenue growth. That would probably re-engage the bulls on the story. And last but not least, Julie, you mentioned small businesses represent 37% of Zoom's annual sales. Are they able to hold on to small businesses, which they have viewed as 10 customers or less? Or have they been able to hold on to them as businesses reopen? And then secondarily, have they been able to trade these small businesses up to paying accounts as folks go back to the office? All very key points to watch out there for on Zoom earnings day.
We talked about this in the context of Zoom a couple of quarters back, Sozzi, about how does the executive team there even form a strategy on where you go from here when you've had 5 years, 10 years, 15 years of expected growth all pulled in to 1 year, and now you've got every major tech company in the world competing into your key market. And I think it's quite difficult here for Zoom to figure out what anything like an organic growth rate might be for the company and how you proceed along those lines. And really, okay, you get all this growth pulled forward. The stock chart looks great over the last couple of years, but I do not envy the management team at Zoom trying to figure out how they just operate the business on anything like a steady state go forward after what's just happened over the last 15 months for them.
And that's a good point, Myles. And I think that's why I wouldn't be surprised if you hear analysts start to pepper Zoom management on acquisitions. They have an absolute ton of cash, do they look to consolidate their position in the office moving forward? Now, they recently started a venture fund to perhaps find the next Zoom in some capacity, but they have a lot of cash on their financial statements, and how they allocate that cash moving forward, I think, is going to be a key question of debate amongst the street.
Yeah, it's, I mean, look, I think that Wall Street often gets a bad rap for its short-term view. I think it's a lot more accommodating than it might otherwise be, but I certainly understand why the Zoom management team and Zoom bulls, long-term Zoom bulls, are certainly frustrated with what they've seen from investors over the last 6 months. And I don't think the answers to those questions are going to get any easier as we get through the call this evening and then, over the balance of this year as Zoom deals with a reopening economy, schools back in session next year, so on and so forth. And we're expecting to speak with Zoom CFO Kelly Steckelberg for us tomorrow morning right here on this program in the 9 o'clock